Hello, everybody, and welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. So, as we always like to start, here at SPY, which is the ETF for the S&P 500. And you can see basically the whole week it's kind of been nowhere. It's up a little bit, but obviously things are good because you can see volatility has dropped way down here to only 7. If I go to the QQQ next, which is the NASDAQ, similar story, not quite at all-time highs as the SPY, but this tells the story with volatility dropping down here only at 20. Obviously, same kind of story. It's kind of trickling up the last week, but over the last few weeks, it's been up as well. And finally, we go to the Russell, which is the small cap stocks. This one is at all-time highs, no question about it. And because of that, look at volatility over here. This thing has just collapsed over the last few weeks or months, down here at less than 1. So, what are we going to trade? Well, we're going to go to stocks that have had earnings already. So I'm going to go over to Apple. You can see Apple over here had earnings, took a huge dump, and it's kind of been sitting here ever since. And volatility has gone down since earnings because earnings volatility always spikes at earnings. So it's still decent. And the reason I say decent is because we just looked at the market, right? We looked at the SPY, the NASDAQ, and the IWM, the Russell. That's the market. And if the volatility is there from like 7 to 20 to 1 is like the range, basically 20 or less is low volatility because the market is extremely low. And we can see this as well if we go to what's called the VIX. This is the volatility of the SPY, and you can see this thing has been crushed over the last few months. It's at its lowest as it's been since the whole year. So, with volatility being low everywhere, even though Apple doesn't seem like it's that high compared to the market, it is. 27 compared to the other three indices is high. So we're okay in this world. We adjust based on the new realities. Market is at low volatility. Apple even at 27, I would still consider high based on the market. So what I'm going to do here is my assumption is going to be over the next few weeks, whatever, months, 30 to 45 days, I'm expecting it could go down, but I'm expecting it to basically trickle up over time. So what I'm going to do is I'm going to sell a put vertical. So if I go to the trade page, you can see I have these as my choices when it comes to which expiration cycle am I going to use. So what I'm going to do is I'm going to open them all up. I'm going to go to minimum strikes, so we don't have to go very far, just to show you volatility. So here's my choices. So if I go to at the money being where is the stock? It's at 305. I'm selling the put vertical. 305 is right here. And you can see this is 25 cents between bid and ask spread. If I go the next month, it's 35 cents, so it's about the same, no big deal. If I go down here, you can see, whoa, this is a big difference. This 47-day weekly cycle is definitely out of the running because of the liquidity. That's a no-go. Look at how wide that market is. So I'll close this one up. And now it really becomes a choice for me. Either one of these is perfectly liquid. The market isn't even open yet, so it'll probably get more liquid when the market opens on Monday. But where do I want to make this trade? Well, in this case, because I want to give myself a little bit more time, this is going to be 32 days tomorrow. This will be 39. I like to be as close to 45 days as possible, and these are both fairly liquid, about the same. I'll close this one up. And now what I'm looking to do with $5 wide strikes is, remember, I want to do 33 cents minimum per dollar width of strikes. These are $5 wide, which means once I get to about $1.65 or more, minimum $1.65, this trade is valid. So we'll start right at the money and I'll sell the vertical. And what do I get? I get 205. Okay, so can I go a little bit further away? Because I'd like to be further away from the stock price. It means my probability of success is obviously going to go up. If the strike's further away, less chance it's going to hit it. So I'll go one down from there, and I'll go try to sell this vertical, 180. And let's just see what would happen if I sold the 295s. 135. Okay, so we figured it out. Where is my sweet spot? Where am I selling this? I'm selling the 300 put and buying the 295 put to turn this into a $5 wide put vertical because I got to collect at least 165 or more, and that is perfect. 180 is right in my wheelhouse. And that's how easy it is to set up trades if you know the rules and you kind of know what your assumptions are moving forward. So everything stays the same in Apple. The market opens up here on Monday. We're going to go down to the 300 put, buy the 295 put at the same time, creating a $5 wide vertical. As long as we collect at least 165 or more, that is our trade in Apple for Monday morning. So before we continue on, I want this concept to sink in for a minute because this is what learning to trade options actually means. It means you have no boss, you have no employees. You are essentially creating your own job. And in this new world, as everything gets harder, wouldn't it be nice to be reliant solely on yourself? My goal here is your financial freedom, and we do that by getting you to a level of expertise and confidence similar to mine. For anyone who wants clean, simple, reliable guidance, I created the Essential Income System. You get the benefit of a structured, research-backed, experienced trader like myself, and all you need to do is follow along. And no, these aren't make-believe trades. These are fully formed trades that I'm actually doing myself in real time and sending to you in real time that are ready to execute. You don't have to guess, you don't have to stress, you just plug right into a system that works. And for those interested in not just copying trades, but actually gaining the confidence to create, make, and manage your own trades, I've created the Pro Trader Academy. It's not just alerts and it's not just courses. It's a complete trading system designed to take you from beginner to intermediate to advanced to consistent. What you need is a structured system, not scattered information. The Pro Trader Academy includes the Essential Income System, but it also includes every course I've ever made, along with every course I will make in the future, plus webinars, plus potential office hours, etc. This is valued at over $2,000. Now, normally the Essential Income System is $49 a month, and the Pro Trader Academy is $99 a month. But good news, because you showed up here today, you're in luck. You can get the Essential Income System for only $1 for the first month, or you can get the Pro Trader Academy for only $19 for the first month by going to sharpertrades.com and using either one of these coupons. So, again, go to Sharper Trades or use the attached links. Again, there's no risk. You can cancel anytime. Give them a try. Make sure they are for you. And I look forward to having you join me on your journey to financial freedom. Hope to see you there.